Good morning, YouTube. Thank you all so much for tuning in. Happy New Year from the team at Trading Analysis. I hope you guys are enjoying the start to 2021. We're keeping our eyes on the markets. It's been a bit of a rocky start to the new trading year. Monday, the market saw a pretty sharp directional correction to the downside, and certainly had a lot of people wondering, is this the start of the larger corrective pullback that we've been looking for? Because it's no secret, the markets have had a pretty incredible rally since the March lows. We are nearing what we feel to be the end of a five-wave motive impulsive rally from the March 2020 lows, and we do feel that the markets are in store for a bit of a corrective pullback. What's really rather interesting is looking at Monday's correction to the downside. It really resembled that of price action that we saw back on December 9th. We had a very sharp move lower in the markets on December 9th, which, back then at the same time, people were also a little bit spooked given the overextension, not only technically speaking, but from a valuation standpoint. Excuse me, it's allergies here in good old great state of Texas. But what's interesting about the corrective pullback that we saw on Monday is, while we do feel this is approaching the final subdivisions of this trend, I do see, when looking at the charts of some of the leading sectors and leading industry groups, the possibility that we do push to a new high before that larger correction sets in. And what's great about Elliott Wave is it provides us with precise price levels to either confirm or invalidate our analysis. So downside wave count and validation, which will tell us the larger correction is possibly in play, is sitting at around 36.45. So we're going to look at the charts here in just 1 second. Let me get this notification paused. Sorry about that, guys. I rearranged the office here, and I've got things reversed, so I've got alerts going off across the room here. So let's bring in the trading analysis team, and then we'll jump into the charts. We are keeping our eyes on futures this morning. We do have some event risk over the next few sessions. We've got the Georgia runoff, which obviously is an area of interest for markets. We've got the certification of the vote today. Inauguration day is on the 20th. We saw S&P futures as well as NASDAQ futures move lower overnight. So we'll get to the charts here in just a minute, but before we do so, let's bring in the trading analysis team. And our fearless leader, Mr. Todd Gordon. He's very busy behind the scenes getting ready for the launch of the money management business in 2021. You guys know all about that. So we thought we'd let him take another week off, and I'd jump back in and host the show. So over to the team. Good morning, Alex. Good morning, Terry. What's happening, gentlemen?
Happy New Year, traders.
Yeah, absolutely. 2020 went by really fast, and it's 2021. We'll see what it has in store.
I'm sure.
Yeah, Happy New Year, guys.
Fast.
It will go just as fast. I should have listened to my parents growing up. It seemed like, a 3-month summer when you were a kid was just an eternity, but now a year goes by like that, and now we're into 2021. So how are things in?
The faster it goes.
It's so true. It's so true. I hate to say it, but my parents were right. Good morning, Alex. How are things in your neck of the woods?
Hey guys, happy new 2021. Pretty much the same. We had a little bit of a holiday, but now we're gonna kick off a new year, and pretty much the same, as you know, everywhere. A little bit of optimism. New Year brings the hope that everything will be different. So let's see what the 2021 will bring.
Absolutely.
It's going to be an interesting one, definitely.
Yeah, we've got new variations of the coronavirus, obviously of concern and interest going into the new year as well. So, guys, let's jump into it. We'll take you into the hard right edge. I'm going to take you through the indexes. I'm going to show you guys the two charts, the leading sector and industry group that kind of supports one additional subdivision. And then if the markets do break south of invalidation, I'm going to show you what we feel the wave count could likely be. So, team, we'll be back with you in just a minute. All right, good morning once again, and we're jumping in to the Motive Wave platform, our preferred platform for working all forms technical analysis and Elliott Wave, along with Optima. Of course, it's a fantastic addition to our arsenal here at Trading Analysis. So let's take a look at it. We're looking at the S&P 500 on the weekly chart, and we're talking about what is currently our preferred interpretation of price action. So going back to the March lows, that's when we see the completion of the cycle degree wave 4. Cycle degree wave 4 was remarkably exactly or just a couple days shy of being equal in terms of time elapsed to wave 2 of the same degree. Wave C was a beautiful 127.2% external retracement of B, very common in this variety of a flat. And from there, we've had a fairly substantial rally, which we feel we're in the final 5-wave subdivision of wave 5, which will then complete a wave 1 of the higher degree. Now, is it possible that the 5-wave rally off of the March low actually represents the higher degree primary structure, which would then complete the cycle degree wave 5? It's possible from a rules and guidelines standpoint. It's not our preferred interpretation. We fell short of upside fib projections. So I do expect whatever corrective pullback materializes to be a viable one and a great place to get back on board this market for those who have missed or just been improperly allocated throughout the recovery effort from the March low of last year. So let's dive into it. We're going to get off the weekly. I'm going to drop you down to the daily chart, and we're going to focus in on the subdivision of the post 4th wave move. So dropping the white circle on here to give you some context as we drop down to the smaller time frames. Off of the daily down to the 1-hour chart, you can see that circle coming into view now. We are tracking price action here as either within a wave 4 or having completed wave 4 on Monday. So let me talk you through this. Going back to the October 30th low, we had a beautiful 5-wave rally into the November 9th Pfizer news, wave 2 pullback. Once wave 2 completes, we rally in a 5-wave fashion, ABC pullback in wave 2, rally into the December 9th high, gosh, hasn't been that long ago, into the December 9th high. When we got to the December 9th high, it was 161.8% of wave 1. This was evident not only in the S&P, but in the NASDAQ, semiconductors, communications, technology. So essentially the sectors, the industry groups that dominated the market rally from the March low was supporting a directional pullback off of the December 9th high. So we had a pretty sharp move in the S&P. It was, or I should say in the NASDAQ. The NASDAQ had over a 3% corrective pullback there. And out of the December 21st low, we have 5 waves here into what we're viewing as green wave 3. So we have a 5-wave subdivision into green wave 3. Green wave 3 is now giving us another directional wave 4 pullback. The price action down on the 15-minute chart certainly looks directional. And that opens up the idea that wave 4 is not complete, but that in fact we just did A of wave 4. Yesterday was a sharp B wave retracement, and then we do move lower to retest downside support. What's great about this count is if we break south of 36.45.99 in the cash session, that's when we can more confidently view this as a likely completed 5-wave pattern. In the meantime, I'm going to continue to operate under the assumption that we do have the possibility for one additional high left in this move once this wave 4 comes to completion. So if we break south of 36.45.99, that's when I'll start to get a little bit more concerned and start to protect some of my longer term investments. But in the meantime, I'm going to continue to look for downside support. If we do move lower here, looking at futures into the cash session, we'll simply view this as B, look for C to take you back down to support, hopefully stay out of invalidation and then move higher. Now, what happens if this is not the count? What if we do break invalidation? How are we going to be labeling this structure? Well, let me take you back over to the daily here, and we're going to switch you to that interpretation. And that interpretation is essentially as follows. We have a completed 5-wave move in blue wave 5, which completes the primary wave 1, but this would unfold as a contracting variety diagonal off the daily down to the 195-minute half-day chart. Basically, we would be viewing this entire structure as a contracting 5-wave structure, so motive diagonal with overlap between your wave 4 and wave 2 positions. I'm not a huge fan of this particular move or this particular count. You don't have clear 3-wave subdivisions in the 5th wave position. So in an ending diagonal, your 1, 3, and 5 positions have to be 3-wave subdivisions. In a leading diagonal, 1, 3, or 5 can be 3 or 5-wave subdivisions. This would be contracting, so 3 is shorter than 1, 5 is shorter than 3, and 4 is a smaller net percent retracement than wave 2. So it would be valid, but this is going to be my kind of back of the pocket count if we break south of invalidation. Now let me show you the leading sector and index, or I should say the leading sector and industry group that supports continuation higher. First, let's look at the chart of the SMH. Semiconductors, this is one of the ETFs that we prefer to track this particular industry group in tech. And let's take a look going back to the March low. So again, March of last year, we complete an ABC flat in the 4th wave position of the cycle degree. We have 5 waves in orange 1, 3 waves in wave 2, very textbook there. In orange wave 3, you have a nice 5-wave subdivision. We then enter a sideways corrective pullback, completes into the October lows, and what happens from there? Well, very similar to the S&P and the NASDAQ, you're going to see as we get off the daily and down to the 1-hour chart, we have 5 waves up into November 9th, a wave 2 pullback. We then have 5 waves in blue 3, a sideways consolidation in the form of an Elliott wave triangle. This is a classic triangle. You have higher lows, lower highs, so price action is contracting, and now we're seeing a breakout to the upside. So that's the SMH. As you can see here, you really can't get a diagonal completion out of the SMH. Over to the XLK, which is a very large component of the overall S&P, we're going to see a very similar wave count at work. Let me just quickly clear all of my ratios, which I can do with the keystroke here in MotiveWave. And back to the March low, you have a 5-wave progression. This 5-wave progression we view as post 4th wave out of the October 30th low, and then off the daily down to the 1-hour chart. What do you guys have going on here? Let's take a look at it. 5 waves up, so off the October 30th low, you have 1, 2. Here's your discernible 5-wave subdivision. So here's your extended wave. Whatever time frame you're counting a 5-wave motive impulsive trend on, at least one of your impulsive waves, so 1, 3, or 5, or I should say one of your actionary waves, 1, 3, or 5, needs to have a 5-wave subdivision. That's what's going on here in green wave 3. Green wave 5 completes, you have a wave 2 pullback. In tech and in the NDX, it was about a 50% correction. In the S&P, it was significantly more shallow than that. Out of wave 2, you have 5 waves up in 1, a sideways wave 2 correction. We then have a 5-wave subdivision in wave 3 into the Wednesday, December 9th highs. Guess what? Right into 161.8% of wave 1. Just really rather remarkable. And then you have a directional 4th wave pullback. This directional 4th wave pullback represents equality to time elapsed, or correction, represents equality to the magnitude of correction in wave 2. And unlike wave 2, it's directional. So you have the guideline of alternation at work. Your wave 4 is directional. This is squaring up to a sideways wave 2 correction. We talked about this with our members last night. Typically, the roles are reversed in that wave 2 is usually your directional kind of shakeout wave, and wave 4 is typically more sideways in nature. So guideline of alternation supported the directional pullback here. And at that point, we put out a video to our mailing list saying, you know, this could likely just be wave 4, which is going to yield a move to new highs. We get the move to new high in tech. Wave 5 completes with an ending contracting diagonal. And then guess what? We have an ABC move down into Monday's low. Monday's low represents about a 38.2% retracement of wave 3, which is very common. Again, we could be looking at A, we're back in B, maybe this is some sort of complex, and we do have a move back to break Monday's low and retest downside support. But as long as we remain north of 125.36 in the XLK, this outlook is supported. So 125.36 in the XLK, 36.45 in the S&P, those are your key levels to be watching for possible invalidation. And that's where we're going to continue to operate. Once this entire subdivision does run its course, which you'll see here from Alex later on in the show, we're approaching a completed 5-wave decline, excuse me, 5-wave decline in the dollar as we're approaching this near completed 5-wave move to the upside in equities. One last chart I have for you. Let me go ahead and pull that up really quick. So the last chart I want to quickly take a look at is the put-call ratio overlaid with the S&P. We've inverted it, so we're looking at it as a call-put ratio. And you'll notice going into the last three market highs, so January of 18, September of 18, February of 20, we saw we saw divergence of this particular market internal. So this particular internal we utilize to kind of gauge sentiment. And you'll notice, and we've talked about this before, market set a high, call buying sets a high, call buying consolidates, market set a new high, call buying fails to set a new extreme, so fails to confirm the new high in the markets, and then you see the COVID sell-off. Are we going to see something similar to that going into this final subdivision? We'll find out. That's kind of what I'm looking for here, looking for a move to a new high in the market, fail to make a new high on the 9-day simple moving average for the call put ratio, and those are the signs that I'm going to be looking for. I'm going to continue to operate under the assumption that we could print one additional high before this is all said and done. So we're going to jump to break really quickly. On the other side of the break, we're going to take you into sector focus with Mr. Terry Long. So sit back, relax, and we'll be back with you in about 1 minute.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to TradingAnalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life seven-figure portfolio with our members who prefer the longer-term investment timeframes with some medium-term trading and option strategies mixed in as well. So head on over to TradingAnalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show.
Hello, traders. I'm Terry Long here with your weekly sector focus for this first week of 2021. I trust everyone had a safe and happy holiday season. And as we start a new trading year, let's review 2020 performance results of the market here. This is final full results for the major indexes and the individual sectors. 2020 saw the tech-heavy NASDAQ still in the lead, up nearly 48% for the year. Small cap Russell Index, represented here by the IWM, up 18.3%. And the S&P ended a very tumultuous year, up 16%. Now, 2020 was certainly a year for stay-at-home stocks, and as you can see here, technology, discretionary, and communications sectors outperformed the benchmark handily. XLK was up over 40%, XLY 28%, and communication sectors up 26% on the year. Now, while in recent months we've been seeing the energy sector stage somewhat of a comeback, it still ended the year lower, and with the worst overall sector performance coming in down 37%. I hope you like this new dark theme here. We're going to try this for a while. It makes it a little bit easier on the eyes. Let's take a look at the performance here of the index and the sectors on the last week of 2020 and the first 2 days of 2021 here. Now, last week, while the S&P and the NASDAQ both ended the year on a positive week and near all-time highs, there was really broad-based participation. And I'm missing a chart here. Let me grab this real quick. There was something else I'm going to show you. Let's see, copy, open link, and drag this little guy over here. Yeah, there's always something I forget. This is last week's sector performance. Let me just drop that there. Well, this is that broad-based participation. Nearly, you know, it was kind of unexpected to see utilities take a lead on the last week of the year, up to almost 2.5%, but pretty broad-based across all the sectors for the last week of the year. Now, energy did not participate in this uptrend last week, and it fell again for about 0.5% loss. I'll take you over to Monday and Tuesday's price action, with the Saudis making that unexpected 1 million barrel a day unilateral rate cut. Oil markets surged higher, and they took energy stocks with them here. On Monday, the markets, the futures did open higher, but only to see early gains reverse, and the S&P was up to 37.65 on a daily high, put in a low at 37.62, and then finally finished at 3,700. And Tuesday was kind of a positive day, but mostly muted here in the price action. You can see we have covered about half of the drop here, about a halfway back in the NASDAQ. Let's move on over here to the sectors, and I'm not sure I like these on the dark theme. Find my mouse here. Our leading sectors remain industrials, financials, materials, communication, and technology. Now, financials moved up into the second place for this week, but last week it was still in third. But if we continue seeing, you can continue this thrust. Financials is going to now, at the remainder of this week, be number 2, and it may actually overtake industrials. It's really got a lot of strength going on here. Communications sector is actually overtaken consumer discretionary and tech and moved on up, advancing here to the 4th place. But I'm seeing a bit of a surprising reversal here now indicated in communications. And that may be due to Google and Facebook pulling the entire sector a bit lower here. Now, technology and discretionary down here in the weakening quadrant continue to lose relative strength, but a very positive tilt is now apparent in the XLK. You can see this rotation is finally beginning to take shape. Now, this market data is at the end of close yesterday, and I know NASDAQ futures are down a little bit this morning, so we'll see how the rest of the week plays out. But for now, we are starting to get this positive rise back here in large cap growth. So the energy sector continues to head east as it continues to gain relative strength, but momentum has been stalling recently. Nevertheless, like I said, the energy stocks surged because of the Saudi rate cut. West Texas Intermediate rose 5%, reaching $50 a barrel, a level not seen since last February. Consequently, stocks, I think, in the XLE also surged on the news. I saw several of them up 10-12% yesterday. Marathon Oil was at the top of my list. And let's move on here. The traditional defensive sectors, real estate, staples, and utilities, they all continue to head lower down here into the lagging quadrant, and even healthcare. It looks to join these three soon as it's approaching this border between improving and lagging. Now, my sector focus today is going to be technology. Just reminding you, technology together, Apple and Microsoft make up 43% of the XLK. So you got a lot of stocks on here, but it's really Microsoft there and Apple here that almost half. Altogether, all 30 of these stocks that I have listed here represent 90% of this whole sector. Now, The positive momentum that we've been seeing in Apple, along with the majority of stocks with northeasterly vectors, is helping to turn the momentum of the overall XLK higher. But Microsoft's sluggish price action during these past few months of consolidation are slightly offsetting the resumption of an uptrend. Now, if we see Microsoft clear this this consolidation, let me pull a little price chart up real quick there and show you the consolidation that I'm talking about. If we can get an upthrust and break through this long period of consolidation, that's what I'm talking about here. All of this right here, and that's been since the September 2nd highs. But we just been chop sideways. But we do have a nice slight uptrend going on here. We're holding the 20-day and the 50-day support line, so things could look very positive. Microsoft down here in the lagging quadrant could begin to rotate higher, and I think that's also that along with Apple continuing to push higher will bring this sector higher. Now, the semiconductor subgroup was fairly active both on Monday and Tuesday. The semiconductors is one of the subgroups that really has a lot to do, a lot of push, I would say, in the XLK, along with software. But there's several other industry subgroups in technology. But I did see a lot of activity going on both in semis. Bennett gave you the SMH chart analysis and showed you that we think we've broken through a fourth wave triangle and now are on our way up in an impulsive fifth wave move. But semis were initially higher Monday. The overall market sentiment brought them back down for a small loss. And Tuesday's action in the SMH was much more confident, I think. Micron, I saw Micron surge nearly 5% Tuesday, followed by Lam Research. Now here's Micron up here. It's got a nice horizontal movement here. Lam Research also very strong on relative strength. But I also saw STM, Skyworks, and Qualcomm also all up more than 2% on the day. And you can see here we've got a lot of strength. Intel's actually gaining a little bit of momentum, but Intel is really the dog of the semis. We've been waiting on this NVIDIA here to start to make a turn. And look, I've got just the initial beginnings of a hook formation in NVIDIA. Again, similarly to Microsoft, a long period of consolidation since September 2nd here. If we start getting some excitement, and there was a big positive candle right here yesterday in NVIDIA, and we start getting some excitement back in this, then I certainly see NVIDIA as one of the larger caps in here too, as well as Qualcomm and Taiwan Semiconductor. So relative strength in the SMH, I think, is here to stay. So I thought it was important to review last year's overall sector performance with you guys first, and I hope that the information I provided you helps you prepare for 2021, because I'm sure it's going to be another exciting year of trading. That's all for now. Back to you, Bennett.
Thank you, Terry. Much appreciated as always. Yeah, it's going to be interesting to see where this takes us. I love the setup in the SMH as well as the XLK. I do see the possibility for a new high within those particular sectors and industry groups. What's interesting is when you are getting up into the final subdivisions of wave 5 of 5, things can definitely get a little bit tricky, which is why we've provided you guys with those invalidation levels. So we'll be watching that. On the other side of the break, we're going to take a look at macro overview, jump into gold, oil, the dollar with Mr. Alex. So sit back, relax, and we'll be back with you in just about a minute.
Hi, if you don't know me, I'm Todd Gordon. I worked in the trading markets as a profession and a passion immediately following college 19 years ago. As I've grown older, my trading and investment style has changed. As I've grown as a trader, my holding period for my investments was also growing longer. I was learning firsthand that being properly allocated in the right stocks and sectors on a longer term time frame with proper hedges in place and the idea of compounded returns are the keys to building real long-term wealth for most of the investing community. You can short-term and swing trade the stock and options market if you like, but do so with a very small percent of your capital. And by no means should you be trading with a majority of your investable assets or your portfolio. For our clients in Trading Analysis, we recommend that you don't trade with any more than 20% of your portfolio in the strategies for our members at tradinganalysis.com. The rest should be managed by a professional financial planner. So last year I ventured out to make a final evolution of my career in the markets. I left the very capable team at Trading Analysis that I built to run the day-to-day operations. I set out to build a wealth management business leveraging our reputation from CNBC and our years in the financial markets. We'll be launching soon, so please keep an eye out for details. If you'd like to be updated as information becomes available, please visit www.tradinganalysis.com/investments. Again, thanks very much for your interest. Look forward to what the future holds. Cheers, and let's get back to the live stream.
Hey guys, hope you're all safe and sound. So let's go and review a little bit of macro development in this new 2021. So as you know, our stance on the wave count on the dollar index is working up nicely. So let's see what's going on there. Yeah, okay, so but this was a little bit of lag. As always, I'm not composed, so I composed with that. So as you can see from March 2020 and the surprise Fed rate cut, we have seen a nice subdivision on the downside on dollar index, and it's clearly well defined. I was looking for maybe a little bit of a flattish pullback in this wave 4, but it didn't occur. I was looking to compare this with all other assets classes. But in general, if you count this and you look the subdivisions, I think we are very close to an end of this cycle of a dollar move lower. So once we realized that this was not some type of a triangle or a flattish pullback, we have started to count this more directionally to downside, and I think we are coming to the final wave 4 and 5. So I will just magnify this for you after I outline the larger move. So there is a wave 1 up into down in 3, 1618. So if you do a simple fib projection that we will use, you will see that we actually came exactly here very nicely at 92.49. Then we had a pullback in a wave 4, which kind of matches nicely with this shorter term ABC pullback in a wave 2. And then we started to subdivide, and our final target is around 88 levels, when I think it's going to be the end of this dollar cycle on the downside. I expect a very sharp and abrupt pullback in an ABC fashion for a wave 2 or B in the next several months. So I think actually that this pullback will last for maybe a month or two, and I'm expecting the reversal in the next week or two to occur. So magnifying this picture, you can see we were looking for a small pullback after this completion of the blue wave 3, which is all of the orange wave 5, and I'm looking and trying also to align this with the teams Bennett and Terry's and Todd's S&P wave counts, where potentially if we start to continue sideways, maybe we're gonna see not such a directional ABC pullback, more of some type of a sideways potential triangle here, and then a swift small move to the downside to this 88 levels, and then a very sharp and abrupt reversal on the upside. So I'm looking for a for a definitely for a correction from this 89.19, 18. We dropped on the low. I'm going to look here for a sideways development to pair that with the assumption that the fourth wave on the S&P and the Nasdaq will be kind of a sideways, not so on the downside directional move, and then I will look for a last move and abrupt. So be careful. I think dollar reversals can be very nasty, and we can see something really, really sharp on the upside in the first 5 wave development up to this 49.78 for the wave A. So I'm just going to issue a small warning. So be careful on the dollar index. We expect a very sharp reversal on the upside. If we pair that with our wave count on the emerging markets, you will see a similar picture. These two are connected. So we also see a very nice development in a wave 1 and 2 up in 3, 4, and we are expecting wave 3, 4, and 5 to complete this orange wave 5, and then potentially we might see kind of a larger correction to the downside, which pairs up with our view on dollar index, S&P, and some other assets classes as well, because they're all tied in. I think I will agree with the sentence that it's not always like that, but it's almost everything is around the dollar. Okay, still. So if we look the oil, Terry explained you what happened the other day. So oil is still moving on the upside. So we are looking for a shorter term pullback paired with the dollar and the S&P. We will see what the magnitude of this wave 2 will be. So we are still looking for a potential 1-2 or an ABC on the upside. And after this nice ABC pullback or a measured move to 100% equality measured by our Fib ratio, we are now looking for the upside in a 5 waves up in oil and a pullback and the continuation when the other markets are ready to follow it on the upside after this pullback is finished. So let's switch to some of the gold. I will not go over yields. There is no any developments on 10-year yields. I don't think there is going to be any developments there. If we start to move in the next few months when this COVID crisis is a bit in more inflationary manner, I think the Fed will do a yield curve control and we will be basically blocked for a next year or two on these real rates moving on the upside. So I'm going to show you gold. So as you know, we also track Forex markets for our clients. A little bit of euro dollar, same as dollar index, small pullback, potential continuation to 125, and I think a bigger pullback will come to 115, 116, from where we might continue on the upside. Wave count is relatively clear as it's in dollar index, so 5 waves move on the upside will complete soon, and we will experience a larger correction to the downside. So gold is very interesting. Our preferred wave count works for now. We were looking for a double zigzag, which is actually, it's going to be composed of the complex zigzag in the W, up in X, down in Y. So we have 3 waves down in W, up in X, down in Y, also in 3 waves. And we were looking here for a potential hold around these levels, whereas the previous X wave of a lesser degree is, and potentially if this continued to the downside, we're going to see another ABC move lower back to 1,700. And for now, this wave count is working. So we had in this X wave, which usually sometimes are very deceiving, a move up in A, triangle in B, reaching exactly a 61.8% projection for the C wave, which we label as an X wave. Our alternative wave count is a little bit more bullish, but I cannot see, rarely happens that dollar index and gold goes in synchronicity with one another. Anyhow, we are still gonna hold this bullish wave count, which projects a directional move. So if we go above a little bit more directional of this potential X wave resistance, I will continue to count gold on a bullish sequence for this blue wave 3. If you want to see what actually we see here as a signpost, what will actually occur, definitely, if you look on a smaller time frame, 5-wave development here, from here, or a little bit more upside, as long as this levels holds. Here, as you can see, I will be definitely turning very bearish on gold for this 5-wave move down in A, up in B, and down in C, lasting for a couple of weeks or months. I don't look this for several months, maybe 2 months of a corrective pullback to these levels, and then continuation on the upside. So we can see the same picture on silver. So if you look the silver, it's exactly behaving for now as we were looking for according to this wave count. We are looking for 3 waves down in W, up in X, and we are looking for another ABC down for Y. Kind of marking this zone from 18 to 21 for a potential lows and a continuation on the upside. For now, this wave count works nicely. We have developments in the X wave in a 3 waves down, 3 waves up, 3 waves down, 5 waves. So it's a flattish X wave. And then I'm expecting maybe a little bit potential move on the upside. I expect this resistance to hold. And then when the dollar starts to roar back on the upside, I expect this to be a wave A, B, and C, exactly targeting this zone for a potential lows in silver. So I can go on with cryptos, very, very huge developments in cryptos. Our longer term wave counts are unfolding nicely. I had a little bit of problem with a shorter term correction, especially on a Bitcoin, but on our longer term wave counts, it's developing really nicely that we put it back scenarios almost few months back. So if you like to see more of the cryptos, please tune in for tomorrow for the Crypto Lab show of the trading analysis. I will go through many crypto developments in the last few weeks, and some of them are really roaring very heavily on the upside. So thank you on the attention, and once again, Happy New Year. All the best to you and your families. Back to you, Bennett.
Thank you, Alex. Much appreciated. Great job, team. Markets just opened. Keeping our eyes on the market indexes. Got to see what the overnight futures action does here. Out of the cash session, yes, and as always, if you guys do enjoy the work, please smash the thumbs up button, subscribe, and turn on notifications to stay up to date with what we're doing. Alex has launched his crypto show that takes place every Thursday, 9 a.m. Eastern, on our Trading Analysis YouTube page. You can go to youtube.com/trading analysis if you want to subscribe to that channel and join him for the crypto show. We've got some crazy moves in development there. And I see Terry's got the thumbs up ready to go. So, hey guys, I appreciate you tuning in. Thank you for taking time out of your morning to be with us for the show. And Alex, Terry, great job, guys. Any final words of wisdom?
I look forward to another exciting trading year with you guys.
Absolutely, absolutely.
Yeah, I think we are going to start with a bang, a little bit of these corrections that we paired. I think kind of when we look all of these markets together, when you see some of the correlated assets classes aligns very well, as we look dollar, as we look S&P, emerging markets and all of that, it's kind of when you track the Elliott wave, it pairs up very nicely. Don't you think, Bennett? They're kind of a big puzzle kind of aligning together, which we try to solve for us and for our members.
Yep, it is, and things are starting to line up, seeing that correlation between multiple markets. So very excited to see what transpires as a result. All right, guys, appreciate it. Be safe, stay healthy. Happy New Year again from the team at Trading Analysis, and we'll see you all guys next week. Take care.
Bye-bye.
See you guys. Bye-bye.